In just the last few hours, we've seen Bitcoin take yet another dive, and this was after repeated rejections throughout the high 30s and low 40s. Of course, busting through that 42K resistance was something that I was looking forward to confirm a little bit of a reversal, or at least give some hopium. See, I was looking for a big test at the 47K range, and the fact that we didn't even get there does not bode very well for the short term. And looking at the price action and news cycle that has emerged over the last few hours, it's pretty clear that we are looking at some very, very dicey upcoming price action. And that is not just for crypto, but across mainstream markets as well. We saw the Nikkei over in Japan plunge 4% on a flash crash, sending shockwaves through the Asian markets, as well as indicating that there could be further downside that could potentially pull down traditional American markets or even crypto. Now, the American markets did not fall, however, crypto got hit hard. And this could be tied to even more extensive crackdowns going on in China. And that's because China has started cracking down not just on crypto miners, but also on OTC desks or exchanges, or pretty much anyone interacting with crypto in a meaningful business capacity. This is a real banking ban that apparently they're reiterating has been in effect since 2017. This, of course, was a meme because it didn't actually ever take effect. And now we have a reiteration of a law that was never really put into place, but is now being called upon. You can see how China just decides to sort of ebb and flow at their whim whenever it suits them to create a bullish or bearish story for blockchain and cryptocurrencies. I mean, we saw over the last few years that China actually really embraced blockchain tech and put it as a top priority. They even embraced certain crypto-based projects, and then they sort of ebb and flow between this bullish or bearish posturing towards blockchain and crypto. The main takeaway here is as they push more market participants out of China, more hash rate out of China, it will open the possibility of an industry that is far less affected by China, which is of course a huge silver lining in this entire story. Now that said, going back to price action, I certainly am on a wait and see. Nothing looks exciting, nothing looks promising about the charts right now, and of course that means that I'm heavily stabled and I'm really just waiting to see what happens here. Some of my longer term hodl positions, like my deep Bitcoin bags and my sort of permanent Ethereum hodls, those are off to the side, but a lot of the exotic alts have been sold for stables, and the goal here is just to wait it out and see what happens. Of course, we're trying to understand whether this is just a bearish wave, whether this is still a little bit of a double bubble potential bull run at the end of the year. I do think end of the year still has potential here, but again, the main thing here is capital preservation. Now that we've gotten swiftly rejected, again, my rule of a 50% or greater pullback is one that I should have been following more closely, because the reality is that that was really the sign that things had shifted. Now that said, can we continue to go upwards in a bullish trajectory? Of course, crypto is always capable of turning bullish at just a moment's notice, but the reality is for the vast majority of probably watchers of this channel, as well as market participants, not financial advice, just what I believe is the easiest way to get through this is just capital preservation and caution for the next several weeks or months. Again, this could be the bottom, the reversal, the perfect buy-in. Everyone wants to buy the bottom and sell the top, but realistically, you don't need to do that, and trying to do that exposes you to a significantly increased amount of risk. That said, I wanted to go over a few perspectives here on Twitter, essentially assessing the current activity in China, trying to get some truth or fiction as to whether this is a positive or negative development. Now, Spartan Black says the ongoing crackdown on mining in China seems to be freaking investors out, while it has a negative impact on BTC's hash rate near term. In the long run, it is highly positive as it removes the single biggest risk to the network, and he's saying China. Of course, below this, he says, in the long run, we are all dead. Of course, the China-dominated Bitcoin mining era may be coming to an end. It will be a source of rich irony when future historians teach the world's free, open, decentralized monetary network was secured in its early days by individuals inside a reprehensive dictatorship. China cracking down on mining is a great development for Bitcoin. David Marcus, Facebook head of payments. If you remember, David Marcus was the one who kept testifying in front of Congress when Facebook was trying to launch its Libra token, and they were freaking out about it. So he's hugely influential in the Facebook infrastructure and machinery, especially as it pertains to fintech and payments. He thinks this is a good thing. We also have Arthur 0x saying authoritarian state banning its citizens from accessing crypto as much as possible is actually bullish and further highlights the purpose of crypto and DeFi. If you know, you know. Now, I totally get this particular perspective, which is, of course, the kind of Gandhi quote. I don't think it was really a Gandhi quote, which is first they ignore you, then they laugh at you, then they fight fight you, then you win. Well, this currently feels like we're being fought, and that is something that a lot of crypto heads, I believe, thought they were ready for, but turns out people weren't really ready for the boat being rocked in this way. We all know that this battle to have crypto really become legal tender and this free decentralized monetary system, well, that's essentially putting its targets on something that governments control, and it's really a big, important part of the government machinery. And of course, there was going to be some significant volatility in that process, and it seems like right now China is fighting this crypto movement, which is in many ways very scary, but in other ways a testament to how powerful and how important crypto has become. The glass is always either half full or half empty, depending on how you look at it. Further confirmations of the mining crackdown, we're seeing airlifts to America that are being priced in kilos. Again, if you guys have tried to buy mining equipment in the past, this stuff is super expensive. So a $9.37 price per kilo is absolutely insane for mining equipment. Again, bear in mind the sentiment now is one of extreme fear. Again, this can continue for a while. It doesn't mean that it's immediately going to reverse, but extreme fear is usually associated with macro bottomings or bottoms in some sense. That's because we are in a sentiment-driven industry. There's no accurate way to price cryptocurrencies. So of course, market sentiment is what drives the pricing. So when you see extreme fear, you should start to understand that that typically is associated with points in which the market tends to bottom. However, that doesn't mean that it's going to happen immediately. It could take some time. But again, keeping your eye on market sentiment is a really important way to understand the next chapter of the crypto industry price action. Again, this is echoed by Santiment, which is essentially a market sentiment analysis tool. And you can see here from this chart that they are now showing that we are at the lowest sentiment since the macro bottom of 2020. And during this time now, MicroStrategy has added yet even more Bitcoin to their bag. Now they hold Bitcoin at an average price of about $37,000 per Bitcoin, and they have over 105,000 coins to their name. So of course, MicroStrategy's continued bullishness is a really strong indicator, and we'll see how this experiment plays out. Because at this point, this will either go down as the single greatest treasury management strategy that has ever been accomplished by any publicly traded company, or an absolute display of madness by an irrational Bitcoin bull that should be put in a mental institution and stripped of his credentials. I personally don't think it's going to be the second one. I believe it is the former. But wow, does Michael Saylor have some cojones for buying not just a little bit of buying the dip here. He's buying the whole gosh darn dip here. So big shout out to Michael Saylor for being the hero we don't deserve and continuing to be so aggressively bullish even during these times. I certainly wish I could be deploying this much capital into Bitcoin right now. That's for maybe another decade in my life, but this is amazing, amazing to see. And it shows you that crisis presents opportunities for those who are looking for them. I also found this particular thread to be kind of interesting. We have this guy, Fitscanties. I don't know too much about him, but I just like this tweet thread. Anyway, he tweets a little bit about how he sees this market going crabby for the next 3 to 12 months before reversing, essentially built off of the strength of L2s, Cosmos, Polkadot, etc. And this sort of triggered me to think about really what we've been through during this bull run, which is an entire wave of excitement for something that's brand new like DeFi. We also just got hip to NFTs as a crypto industry. NFTs were such a small sub-niche and subculture of crypto before. The problem is, though, that these systems aren't really ready for prime time use. And as retail flooded in, the price per transactions, they skyrocketed into the hundreds of dollars. And essentially, Ethereum became useless. A lot of the core infrastructure was only being pushed out to other chains by necessity, but really the house hasn't been built yet for crypto to be adopted by the mainstream. This isn't like a product like Uber or Facebook that can just quickly scale and accommodate all of its new customers. No, crypto was really struggling and pretty much crumbled under the weight of the new attention to the industry. As much as everyone was super excited for this wave to really take over and take us to the super cycle, the mainstream, the truth is that crypto and the infrastructure pretty much crumbled when the new crowd arrived. So this particular viewpoint to me is interesting just because really the hope is that when the mainstream, the public truly arrives, crypto's infrastructure will be able to support the weight, and this will be a successful transfer to this new monetary system instead of what we saw, which was essentially a collapsing of that infrastructure under the new weight of the attention. Now, personally, I do believe that we have a lot to look forward to. Hopefully this is not a 12 12-month long experience here, this bear market. I mean, if we look back at 2018, we saw almost all of 2018 was bearish, and then 2019, at least the first half of it, was pretty bullish before it corrected. So I do believe that we could be looking at a couple of months of bearishness, but I do believe that 12 months might be just the absolute maximum I could see before we see some positivity again. Regardless, as you're seeing, nobody has a real handle here on time analysis. It's important just to preserve capital through these times and make sure that you're set up and still paying attention for when the bull market returns. That is the most important thing that I can impress upon you in this video. Again, we also have Arbitrum, one of the main layer 2s that is supposed to be released to its users in a week or two. Z-Sync 2.0 and Starkware, both in testnet, as well as Optimism mainnet coming this summer. These are all really the core scaling mechanisms for Ethereum that everyone's looking forward to. Polygon is awesome, but it operates more like a sovereign L1, although it's integrating closer and closer. We're seeing actual sort of what they're calling native L2s starting to come to life here. And like I said, that will be a really important thing, and hopefully they come to life before we get this next wave of bullishness. That way people don't get cursed with these crazy transaction fees and Ethereum essentially becomes significantly more useful. And finally, I wanted to touch on this project called Cozy. This is new. I think this is from Andre Cronje, but essentially this is a DeFi that has automatic insurance built in, which is really a huge step forward. I don't know if any of you are DeFi yield farming. It's always a pain to find coverage for your yield farming positions, and oftentimes they are sold out and there's no coverage available. So being able to keep your crypto cozy by having it auto-insured is a fantastic, fantastic development. Keep your eyes on cozy.finance, just a little tip. And finally, we keep seeing the average number of deployed applications on AkashNet is about to hit 100 net new deployments per day. So this is a really, really interesting development. You can see that AkashNet is growing in its attractiveness to developers. This is of course because Greg and the team over there at Akash also know how to grow developer interest, as they were the ones who created Firebase, which was eventually bought by Google after hundreds of thousands of developers adopted it. And so they know how to bootstrap developer interest. Again, big shout out to the folks over at Akash. If you guys want to know how to stake to Akash, I have a video on that. I'm a big fan of Akash. Check them out. I'm definitely not getting rid of my Akash position, even if things get really gruesome. I'm holding on to my AKTs. Again, not financial advice. It'll probably drop significantly during this bear market, but some projects I just don't want to let go of. That's just my approach, but I encourage you guys to find your own approach to the markets. And finally, we see Curve locking in another 1.4 million CRV, bringing their total VCRV to over 20 million. And this is to increase the boost of all CRV vaults and 1.57x the baseline of YVE, CRV, and YV boost rewards. Again, this just shows you how bullish Curve is, and really Curve is such this underpinning protocol for all of DeFi. No matter how dicey things get, I'm still very bullish on Curve. I think it's one of the things that will continue to outlast for sure, and will probably grow to be one of the most dominant protocols in the future. So this is something that I'm keeping my eyes on. I'm very fixated on DeFi during these dips. And of course, as things start to hopefully reach a position of bottoming, getting some positions allocated at cheaper prices into what I consider the premier DeFi protocols is something that's on my list of to-dos during this bear cycle. So after unsuccessfully breaching 42 to the upside, things are looking a lot more dark and dreary, at least in the short term for Bitcoin price action. A dip down into the 20s is certainly not off the table. In fact, after that rejection, it's statistically more likely that we do dip lower. That said, who knows what's going to happen? It's important right now, I think, to just preserve capital and keep as much dry powder on the sidelines for when we do get a clear signal of sorts. And that's what I'm doing. Again, I encourage you guys to formulate your own opinions and your own approach to the market. That's just my particular approach. It's important to remember that as painful as bear markets are in price action, the bear markets bear fruit when it comes to technology developments. So hopefully over the next few days, weeks, and months, we get an ecosystem that evolves rapidly with all this new capital and excitement. We've proven that the altcoin markets can not only recover from bear markets, but can actually reach new all-time highs and thrive at levels previously thought to be insane during these bear trends. We'll there is always yet another bullish trend ahead. What I can impress upon you is the most important thing to do here is to not turn off from crypto. A lot of retail traders, they come in when things are hot and they leave when things cool off, and they miss those opportunities to really build sustainable and well-priced positions in the crypto economy. They have a saying that bull markets make you money, but bear markets make you rich. And that's because bear markets really offer just rock bottom pricing on assets. That's just the reality. Now, people are gonna say, Elio, are you saying we're in a bear market? I think until proven otherwise, this is a really powerful bear trend and we just need to wait and see. Now, if this thing just rockets back up to 55K and beyond, well, that's a different story. I do believe that we could look at a strong end of year, but for now, it's about capital preservation and seeing how low this particular dip can go. Because if Bitcoin dips down to the low 20s, prices are going to be absolutely on fire sales. So make sure that you're preserving your capital. Again, not financial advice, just the strategy that I'm using in trying to manage my stack the best and essentially take advantage of any exaggerated discounts that we might see upcoming in the market. With that said, two sectors, DeFi and NFTs, are going to continue evolving at a feverish pace, and you're going to want to be there when they do come back and explode back into popularity. That said, I hope you guys enjoyed this episode. We're going to keep coming with the content rain or shine here in crypto land, just like we did throughout the last 4 years. We'll be here, excited for each twist and turn on the journey. I hope you guys enjoyed this. I'm Elio Trades. Thank you so much for watching, and I'll see you very soon on the next episode.